It's Wednesday, February 18th, 2015. My name's Des here at Grok Trade, and I'll be with you for the next few moments, giving you the very latest of technical analysis. And check out the broad markets as a whole. You have the S&P, break even, Dow, a little bit in negative territory. But you do have small caps and NASDAQ both in positive territory. So with that, gives us a bullish bias going into tomorrow's session. Banks, though, saying, nope, won't have anything to do with the bull side. The underlying support of this market right now is very weak. Financials down 1.33%. The VIX down 2% after yesterday's big rally. Gold sees positive territory by a fraction, silver down by 0.5%. Crude oil down 2.7%, US dollar at break even. Utilities index, which is a defensive sector, people are starting to buy into that, and you'll see that we are up 2.25% closing out today. Can't blame them, and here's why. The S&P 500 daily chart has bounced off of a support, busted through the 100-day moving average, busted through the 20-day moving average, busted through the 50-day moving average, did a little rest, bull pullback to the 50-day moving average, and then rallied and rallied and rallied, and then popped up over major resistance, hitting all-time record highs the previous two sessions. Now we stall. We started to sell off. Buyers came back in, rallied back higher. The problem is we have basically a tweezer top. That's where the highs are very similar. And you have a doji. It's a dragonfly doji. But this is a signal of indecision, and this could start to drop. Now listen to me closely. We need to stay above 2090. That's that line coming across. Price action needs to close above 2090. If we can continue to stay for the remainder of this week going into next week above 2090, this very important level of support, if we can do that, that will build us a high base formation, something in which we can launch from higher. Now, if we get a close below that, look forward to another down leg, much like what you see here and here and here and here. Look for a nice down leg here. Be shorting opportunities if that happens. The question is how far will it retrace? Will we actually dip back into the 20 and the 50-day moving averages, or will they act as actual support, something to bounce off of? Very important to be watching for that. Here you have kind of equal highs. There's your tweezer top in a crash. Here, equal highs. You can see it right there. Crash. And nothing here on tweezer tops. I'm just looking for other tweezer top formations to show you when it happens. And they are fairly rare, but they are very powerful. It even happened on the downside, kind of equal, not so much, but you did get a nice little pop there. And anyway, tweezer bottoms and tweezer tops can be very powerful, and that's right there, kind of a tweezer bottom, nice rally. And so anyway, we're kind of there now. We'll see if we actually break down. Again, 2090 is the name of the game. We'll catch you guys tomorrow.